for the most part, most tap-based transactions in the US, especially if you're using a credit card, tend to go pinless. Yeah, and that's just because, again, like the security is built in the biometric of the device, right? So is it really that much secure? It's debatable, right?
Because if you're using a wallet-based applications like Apple Pay or Google Pay, then of course, so one level of authentication is already done while customer is enrolling the card, and even before you tap the card, you have to unlock your phone, and it depends how. Hello everyone, this is Ramesh Chuk, and I'm back with an exciting podcast on my YouTube channel, the Domain Podium. Today we have a very special guest joining us on the stage. Meet Mr. Ahmed Siddqui, the author of one of the best-selling and a very popular book in the card and payment industry, The Anatomy of the Swipe. But that's not all. He is also a YouTuber, a trainer, and a mentor for those who are willing to learn the payment domain. Currently, he holds the position of Chief Payment Officer at Branch in Minnesota, USA. With a decade of experience in the payment industry, Ahmed's role at Branch is to ensure that the payment solutions are built with top-notch quality and deliver the platform that offers faster, more flexible, and reliable payments option for people to get paid. We will continue to talk about his role at Branch in detail, but let me first invite him on the stage. Hi Ahmed, welcome to the show, and thank you so much for joining us today.
Ramesh, I'm so excited to be here. Thank you so much for inviting me. I will have to make a admission here. I am one of your biggest fanboys. I remember watching your YouTube videos so long ago with your ISO 8583 explanations. And so I'm so honored to be here because I get to chat with you. So thank you so much for having me.
Pleasure is all mine, Ahmed. I remember, we've been in touch, I think, quite long ago when you were writing your books. Since then, we have been talking to each other through LinkedIn, but now got an opportunity to know more about you, right? So your journey so far. And the first thing that I wanted to talk about today with you is about your book. Like, how did you get that idea? Because I'm personally, into this domain for more than 15 years now. What I thought is to create videos, right? That's my own choice, which I made around 6 or 7 years ago. So I'm curious to know, what made you realize that you should write a book about, a card and payment industry. So what's the journey behind? What's the motivation behind this?
Yeah. So again, prior to me joining Branch, I was a very early employee over at Marqeta, which is an issuer processor of cards. And so I spent almost 4 years there without any experience in payments. And so I joined that because I wanted to work with a really close friend of mine with no experience in payments. And when I first started there really wasn't much content, both in terms of blogs or books or videos, etc. And so I kind of had to learn a lot of the stuff by myself. And so I wrote a lot internally, just, Confluence pages and whatnot. Obviously, as that business was growing, I wanted to educate a lot of people there. But then when I left to Branch, Branch actually was not a payments company when I first joined. And so when I joined, it was kind of think about it as a shift swapping app for retail employees. So you can view your schedule, you can see if there are any shifts available. But essentially, it was all about us helping them make more money by taking more shifts. And probably a few weeks in, I came to realize that, it wasn't so much about taking more shifts. These people just needed to make more money, and they needed to make it faster. And this was clearly a payments problem. And so we shifted the business to be a payments company very, very quickly. And that business just took off overnight. And because of that, I had to spend a lot of time educating our engineers, educating our salespeople, educating our business folks on what happens in payments, get them interested in how, money is made in the payment side. So I got an opportunity to compile a lot of my learnings into a book. And a friend of mine actually urged me to take a class on how to write a book. And so I took that class, and as part of that, I was, taking a lot of my writing and learning and putting it there. But the one thing that I was going to call out is, for me, I'm a very visual learner, and I need stories, I need drawings, I need it's hard for me to grasp these concepts without that, right? And which is why I really enjoyed your...
I'm sorry to cut you down. So you need a visualization of what you maybe, read about, or maybe what you experience on a day-to-day basis. I understand that. And interestingly, people would prefer to maybe create some training materials for others to learn, or like I decided to create a video, right? So it's really interesting to know someone has decided to write a book. It's not just that creating a training content or maybe a video of as a training, right? And help others to learn the domain. But it's really good to know that that was one of your motivation behind writing the book.
Yeah, well, again, I wrote the book specifically for my team at Branch. And so it's like, okay, if I sell even 50 copies, it's really great. And that's actually what happened. When I published the book, it was peak pandemic, around April of 2020. I couldn't even get the book in the hands of the people at work because we all became remote, right? So I had to send these books out to everybody. But then what happened is it slowly started people started picking it up. And then I started getting messages on LinkedIn from all sorts of companies, including Visa and MasterCard, Marqeta, Galileo, TSYS, Stripe, and Square. And they're all said, oh, I really enjoyed your book. We want to use it as kind of onboarding material for our new employees. So that's kind of where I think a lot of this took off, which has been great. It's been a humbling experience just because I wasn't expecting any of it, right? I wrote the book for selfish reasons. I just wanted it available for my team. I was expecting to sell 50 copies, right? But it's cool that people are picking it up and using it and finding it useful.
Oh, and would you mind sharing how many copies you have managed to sold, so far till date today?
So far, I think I've got about 15,000 copies sold.
Oh, wow. That's really a big number. I've reached 15,000 followers on my YouTube channel. So congratulations, Ahmed. That's really great to know about your books. And to be honest, I was one of the early reader of your book. I remember that, and I've gone through it. And the way that you had explained, the way you had created the stories behind that, as you said, you like visualizing things. You like, some diagrams, some stories behind that. So I also like the way I learned a lot of things from your book, that how you should try to, maybe convey your knowledge to others. How can you cascade that information to others? So that was really great learning even for me. So moving forward, Ahmed, let's talk about a bit of, about your role in Branch and what kind of, the business that you do in the Branch, and what others, the product that you have, that you sell. So I'm curious to know that you said because earlier Branch was never been into the payment, business, but probably you joined and then you have started venturing into the payment as well. So my question is particularly in that area, what kind of product that you have and what's your role exactly there in the Branch?
Yeah, I think the best way that you can think about Branch is that we accelerate payments to workers. So workers could be standard W-2 employees, or they could be 1099 contractors. And the idea here is you should be able to pay somebody after any unit of work. So you complete a day's worth of work, you should get paid. And so that's what we're really working to enable, because majority of financial problems are actually because of cash flow issues. And especially with the demographic that we work with, typically are mid to lower income people. They typically will spend all of their money the moment they get it, and they won't have any more money until their payday. So if they get paid on the 15th or the 30th of every month, then they get their money, they spend all of it, and they won't have any money in between. And so that creates a lot of stress for a lot of people because if you have an unforeseen expense that comes in, they're scrambling to like borrow money from somebody or their family, or they're going to a payday lender. So we want to be able to smooth out the cash flow for a lot of these people and hopefully reduce their stress. And so like the best example that I can give you is for pizza delivery drivers, we can get their tips delivered to them digitally after every delivery. For an Uber driver, we can get them paid after every ride, or after every, if it's Uber Eats delivery guy, then you can get paid after every delivery. And then finally, if you are working at a restaurant, we can get you paid on a daily basis.
So who are your customers? Like, is this the end consumer or the user, or in between there are processors or bank?
Yeah, that's a great call out. So what we do is we do not go directly to the end consumer. We always go to either their employer or their gig platform, right? So an example of an employer is Domino's Pizza. They actually hire and maintain their pizza delivery workers. But then on the 1099 side, Uber is the next best example, right? So we actually power the Uber Pro card here in the US. And so all of these Uber drivers can actually get paid instantly after every ride on our platform.
So, but since the payment and the fund flow is involved, is there any sponsorship required from the bank by any chance? Not for you, but maybe for the business that you are selling to?
That's right. So again, in the US, you have to be using a sponsor bank to power this. And so essentially, you can think of it as we're offering checking accounts to these workers, and it comes with a MasterCard debit card as well. And so since it's our account, we can go ahead and post very frequently for free. And so the objective here is that for the worker, we don't charge them anything. And even for the employer or for the gig platform, we don't charge them anything.
And I was going through your website, okay. There was 1,099 contractor payment. Is that the exactly thing that you're talking about, or it's a different product altogether?
Yeah, so 1099 contractor payout, what that means is these are contractors, they're not employees. So that's what that means. Yeah, so they're like, just think of them as just contract workers. You can choose to work whenever you want to, but you're not being forced into working a set number of hours.
So another thing, you remember we've been discussing about the differences between US market as compared to the rest of the world. There has been a lot of progress, particularly in the area of card processing and the digitization. That's how it has happened. Okay, a couple of years ago, there was no EMV cards, as you know, right? And from EMV, basically from MagStripe card to the EMV, we have seen that journey. And surprisingly, in the US market, what I could learn in the last couple of years is that US is still behind in terms of adopting those technologies or adopting those changes that the rest of the world has been already following, and they start using it.
Yeah, I think, and by the way, I actually started my career in Dubai. When I was at Marqeta, it was one of my first projects was actually in Dubai. And I specifically remember everything was chip. Everything was chip. And that was weird for me because, we were so used to the magnetic stripe. A lot of the cards were starting to have a chip on them, but we were just more accustomed to using the magnetic stripe and not the chip. But everywhere there, they would actually bring the terminal to you at a restaurant, and then you would actually insert the card there. But the US, I would say, is probably caught up on the EMV side, and also the next evolution is actually tap to pay with either the NFC card or with Apple Pay, Google Pay. But I would say that generally the US has been a card-heavy country from way back, right? Cards were basically invented in the US, but the infrastructure, it took so long to build that infrastructure with card readers at merchants, the merchants just didn't want to shift over to EMV because there's a huge expense to now replacing all of those machines. And so in the US, you don't have any sort of government mandate that says you must do this. The card networks can say, we want you to do this, but there's no government mandate that says you must start accepting chip-based cards. And also on the issuer side, they don't say you must offer EMV chip here. So it's just taking a lot longer. But I would say like anywhere I go nowadays, like swipe is not a thing anymore. I feel like people are just really migrating over to tap more than anything else.
And in the tap and pay that you just now said, are there any limits for PIN-based and without PIN-based transactions in the US? Like in India, you have a limit of 5,000 rupees, right? Up to 5,000, your transaction can go through without any PIN. Similarly in UAE also. So are there any limits for you to enter? Mm-hmm.
Yeah, I mean, it's similar. It all depends on the issuer, right? But for the most part, most tap-based transactions in the US, especially if you're using a credit card, tend to go pinless. Yeah, and that's just because again, like the security is built in the biometric of the device, right? So the PIN, is it really that much secure? It's debatable, right?
Because if you're using a wallet-based applications like Apple Pay or Google Pay, then of course, so one level of authentication is already done while customer is enrolling the card. And even before you tap the card, you have to unlock your phone. And it depends how issuer has implemented. But there are certain, validations implemented at the acquirer side as well on the point of sale terminals. So like in India, all acquirer have set a 5,000 limit, irrespective of that, whether you use an actual card or you use a mobile application, whatever it is, okay. So up to 5,000, they will allow you. But I understand that in US, most of the transaction goes through, I think, without the PIN and that kind of stuff.
Yeah, I mean, I have a personal thing on this one. It's again, if you're trying to be contactless, why are you touching the and adding the PIN, right?
True, that's true. Fundamentally, yes, that should be how it is. The transaction should go seamlessly. But again, to overcome and to consider the risky scenarios and the fraudulent cases, so it's better to have the limit on the higher side. I remember this earlier contactless also. I think just before COVID, I guess in rest of the countries, even contactless also. Most of the merchant in India, they were not even preferring to allow a contactless transaction. Trust me. Every EMV transaction was a contact transaction because merchant wants customer to enter the PIN. Okay, without PIN, merchant doesn't want to, allow a customer to go through the transaction. But this is where another part of the differences that I was talking about now. Okay, so one difference is on the issuing side, how customer authentications are done. Okay, there's a bit of relaxation, I guess, to the card holders. Without the need of any second factor authentication or PIN, whatever it is, okay? Customer can prefer to do a transaction seamlessly. Well, what about on the merchant side? What's the difference from the acquiring side?
Yeah, it has actually nothing to do with being able to offer contactless or not. Most merchants actually want people to go through checkout fast. The faster you can get them through checkout, the better, right? Try to do as little friction as possible. So with even an online website, the whole idea is how do you make that process very smooth? But also on an in-person, you want to get them through the line very, very quickly. And so most merchants will optimize for pinless type of experience. However, there are merchants who want to do intelligent routing. And when they do routing, anytime that you enter in a PIN, the interchange is actually less than if you were to go as a signature-based transaction in the US. And so if it's a debit card that's being used, the smarter merchants, the larger merchants will always want to route it to a PIN transaction simply because they're paying less in interchange. So that's what's actually going on, is that, in one hand, the merchant is trying to speed checkout. The other hand, they're trying to optimize how much they're paying for the transaction, right?
And one of the things that I have learned in the past, very recently, like on the acquiring side, there are, I think, numerous switches, domestic switches in the US, right? Whereas if I look at any other country, right, and look at India, okay, we have just one domestic interface, or UAE also developing there. Similarly, in Sri Lanka, I've seen only one, not more than one. So most of the acquirer and issuer, they are integrating to that domestic switch to ensure that their domestic transactions are not going outside the country. So even if whether you use a Visa card, MasterCard, any brand of card that any customer is using and any issuer is issuing, so all domestic transactions are getting routed through the domestic switches. But in the US, as far as I know, there are a lot of the switches, the in-house switches that you have, and the domestic switches. What's the reason behind that? Why do a country need these many switches, and what's the business behind that?
Yeah, well, I mean, there's I guess the way that I want to put it is that it's an opportunity for a lot of people, right? So each debit card needs to have at least 2 local networks on there. And so as an acquirer, you want to be able to integrate in with as many combinations as possible. So for example, Visa owns Interlink. It used to be independent. They purchased it. MasterCard owns Maestro, which is their sort of PIN debit network. And then Discover owns Pulse, right? And then there are other ones called Star. There's one called Shazam. There's one called Excel. So these are all owned by different processors. And the idea here is that you want to be able to give the merchant choice of routing. And the merchant might know that, hey, if I route it via Star and this card has Star available on it, I would get the lowest rate. Or they know that my cards, like for example, all the branch cards also offer Pulse and Maestro. They might want to route it through Pulse because they know that that's the cheapest.
Reason I ask you this particular question, Ahmed, because if any processor, is willing to enter US market, any new processor, probably at some point in time, they have to integrate with these domestic switches so that their acceptance reach of their card issued through that processing system can actually be increased, right? So I'm moving back to...
When you say processor, you're referring to as an acquirer processor?
Acquirer as well as issuer, probably issuer also, yeah. I'm talking about
yeah,
issuer.
So that's right. So an issuer processor needs to be able to offer multiple local or PIN debit networks. So again, if you're issuing a MasterCard card, you have to power Maestro, and then you have to offer some other network. It's referred to as an unaffiliated network. So it could be, they need to offer Interlink, or they need to offer Pulse, or one of the other ones. So it's less so for the issuer processor, but the acquirer processor needs to be able to work across all of these.
I understand that. The next thing that I wanted to, take your knowledge about the US market is the cashback and rewards. Why I have, to be honest, added this question to my list is because in the US, as I understand, and most people depend on credit card throughout the month, and in addition to their salaries. And as I learned while working on some of the US specific requirements, that rewards is one of the benefits that most issuers uses in the US to attract or to sell the credit card, rewards or cashback. So what's your take on this one? Like, how do you see that, how other issuers in the US are using these two features, cashback and rewards?
So, I mean, I exclusively use credit cards for just about everything. And the main reason is because of the various points that I'm getting. Now, there's a shift in usage. So the younger people are preferring to use debit cards simply because it's easy. You don't have to worry about, paying the bill at the end of the month, and it helps them live within their means. Whereas credit cards, what happens is that you just keep swiping, and you can easily get into trouble, right? And so, again, for me, I've been just fortunate that, I know how to sort of manage my spending, that, I can manage that, but just a majority of people get into a lot of trouble when they're using credit cards, and they basically just charge everything on there, and then they come to realize at the end of the month they can't pay it. So then they're paying all this interest on it. So, again, if you can manage your spending, I would highly recommend using a credit card simply because you get the points, and then you can convert those points for, travel or whatever have you, right? CashBack.
Any specific rewards program that you want to talk about that is, more popular in the US?
I mean, the American Express, cards actually have very rich rewards. And the reason behind that is because, again, American Express has probably the highest interchange of all credit cards here, so that they're able to offer very, very rich rewards. I exclusively use Amex Platinum for a lot of things. And it's not just, I get points, but there's a lot of like travel related benefits on it, including like access to lounges and you get extra points if you book travel on it and that kind of thing. So because I travel so much, it's very useful from that perspective. And there's a lot of protections on there too. So if, for whatever reason your bags get lost, they have insurance on it and that kind of thing.
So the other thing that from my experience that I have noticed, Ahmad, like when it comes to rewards or cashback in India, particularly than in UAE, okay? And that's why I ask you how it's getting done and what's the role of rewards in the US. Like typically in India, if you see, people are using credit card not just because of rewards or cashback, just because they need money. They need lending, okay? They want to lend money from the bank. And credit card is an easy way for them to lend money from the bank. Okay, somebody applying loan and then paying it every month is a tedious, process. But getting a card, provided your credit score and your KYC is true, and then you are eligible for a card, okay? So that's the primary reason many people in India, they want a credit card. Not all of them are even aware of whether there's any reward, whether there's any cashback. They just want because they need money, okay? And then when it comes to UAE, okay, I don't think so. People are using credit card. Not many. It's just my, personal opinion, my own perspective. Okay, people are not using credit card because of they want money. No, they have money. They may be making a good amount of money every month. It's just that they want to save some money because of rewards. Every transaction there are 3%, 4%, 5%, even up to 8 or 9% of cashback is what people are getting in UAE. There are many banks. Although I think you pay some annual amount of fee over there on the card, but still you get a very good return, okay, in the response, because you save. Some people, I know my friends, okay, they're saying I'm able to spend amounts so that I can easily buy grocery per month. That's the amount I'm saving, 500 dirham or 1000 dirham, right? So that's the thing that I wanted to know, like what's the culture in US for these rewards and cashback? What's the primary reason people want to use a credit card? Is that the rewards or the lending? Oh boy.
So I think you're right. I think a majority of people use credit cards from the lending perspective. And it goes back to what I was mentioning earlier, where these people, they get paid on the 15th and the 30th of every month. And most people just spend all of it. And they don't have any money in between. So what they do is they use the credit card to manage. And that's if you have good credit, right? A lot of people have just really bad credit, and so they don't get access to credit cards. So I would say majority of Americans are using credit cards as a cash flow vehicle. And the rewards and points, it's a good thing. I would say, I'm fortunate to be kind of, higher earner, I guess. I think a lot of us are, especially the people that are listening to your podcast are probably in that higher earner category. So there it's like, you don't need the money, but you're utilizing them to get the rewards on the credit card, right? So, and again, I've kind of changed my perspective a lot on this too. It's like, it's not about banking points. It's more about what other benefits can this card actually provide me? Is it providing me better access to certain things, these are things that I personally kind of look for.
So, so Ahmed, one of the thing again about the US market is the safety and the security of the transactions and the card holders. Okay, those who are using the payment instrument to make payments at a merchant store or maybe on any online website or mobile application, right? So the PIN aspect of that we just now covered with PIN without. When somebody is making payment online on any merchant website or mobile application, then this is where the second aspect of this, the user's second factor authentication comes into the picture, right? So in the US, from my experience that I've seen, most transactions are done without any second factor authentication. Means the moment you enter the card number, I'm really not sure, maybe you can help me understand more on this one. After that, you enter your expiry date. Whether you're entering CVV2 is not, even that's an optional thing, not a mandatory thing, as I know, okay? And then OTP, of course, is a completely optional. It's outside the question, trust me, right? So what's the reason behind that? Okay, whereas in India, if you compare now, in India, I think there is a mandate, it's mandated by the government. You did mention that there's no such mandate by the government or the central bank, right? But in India, there is the mandate, right? So every single online transaction, although there are some relaxation, transactions are going through some second or without second factor authentication, but there are certain limits, okay? But in US, most transactions are without any second factor authentication, right?
That's correct. Yeah. So again, you're spot on. There is no government entity in the US that can mandate 3DS. So you look at Europe, you look at India, even UAE, they are very forward on 3DS. But what we've come to learn, and again, I think we touched on it a little bit, is the friction for checkout, right? 3DS creates a lot of friction at checkout. And merchants actually want to be able to process transactions quickly. So what the merchants are basically saying is, okay, Visa and MasterCard or American Express, you have a set of rules already in place that manages the chargeback flow. I mean, the chargeback flow in the US actually works very well. Like, there are very, very defined rules on when the merchant wins versus when the issuer wins, right? And so one of the other additional things that the card networks are providing is they're providing a fraud score. And so if the issuer is utilizing that fraud score, they can actually decline the transaction if the fraud score is high. And then it gives an opportunity for the person to say, you know what, this is me doing this. Let me try that transaction again. Versus OTPing everything. So that seems to be a little bit more of where things are headed because, again, 3DS can't be mandated. But the card networks are actually putting in various, chargeback rules based off of, what that fraud score looks like. So if the issuer sees the fraud score as being high and they don't decline it, and it does truly become a fraudulent transaction, then it is actually going to be the issuer that's on the hook versus the merchant. And so it's very finite how everything is defined by the card networks.
So it means that issuer in the US region, they are heavily relying on Visa, MasterCard, value-added services also, probably. Correct. So, because of course, at the end, any issuer would definitely have their own fraud monitoring system. But then, even before that, they are relying on the fraud assessments results being provided by card network, which is a fraud score.
Yeah, the card network is one signal, right? So the score, there's many other things. You can look at biometrics. You can look at where the phone is. Was this actually being done in the US or outside? Like, there are many other signals that you can use. But fraud score from the card network is just one of those.
But are there any controls like being given to the cardholder directly? Like, if I as a cardholder wanted my transactions to be always secure, So do I have that control in my hand, regardless of what issuer says, right, or what acquirer says?
No. I mean, if the issuer is not providing those level of controls, then they don't have access to it, right?
Interesting. Because again, if you know about Indian market, or particularly about India, I'm talking about, the Reserve Bank of India, a couple of years ago, they mandated all issuers to provide a certain level of card controls to the users. Okay, so if you navigate to your mobile application today, although it's under card section, then sometimes it's hidden, and probably you get to know when your first transaction or any of your transaction is declined first time. Because I personally experienced that when my online transactions was not going through for my card in India. That's in India, but I'm using it in the EUA. Okay, so it was not going through, and I really got surprised that why my transactions are failing. I have sufficient fund. Then I realized that there's a card control, and the default recommendation is to decline. Okay, so I had to go to the mobile application and override the issuer configurations and allow that transactions. So since we are talking about the e-commerce transaction, okay, the second factor authentication, the next thing that comes to my mind is the recurring transactions. So recurring in India today is completely on top of the payment domain, nowhere documented, to be honest, in any of the specifications. It's a completely custom version of how recurring can be supported in a country. Okay, whereas I believe no other country has that rule. Even a recurring transactions requires a second factor authentication by the card holder if it is going beyond certain limits. Okay, so as far as I know, in the US, I don't think so there's any such rule, but recurring transactions are seamless again. And even it goes through, I guess, some of the issuers are designing their softwares like that. Like even if the card is blocked or closed somehow, I think the recurring are going through, right? That's the case.
They are going through, yeah. So let's say, for example, you have a recurring cell phone payment, right? And in between, you lose your card and you get a new card. It's smart enough to move that over. It's called there's actually a term for it specifically, but the mapping remains. And there's actually a lot of work that's being done by the networks to make sure that those transactions go through. Same goes with Apple Pay and Google Pay. If you reprovision your Apple Pay and Google Pay token, and you already have a pre-existing a subscription, like a Netflix subscription or whatever, it will still go through. And so there's a lot of work being done here to make sure that recurring transactions continue, even if these cards are lost, stolen, or whatever. They're still able to hit the account.
And what if it is a fraudulent case? Who takes the liability of?
If it's fraudulent, the issuer can actually block it. So you could say that, hey, this Netflix subscription or this phone subscription actually is fraudulent. So what you can do is you can block it. But the cardholder still needs to call and say that this is not my transaction. Please make sure that it doesn't go through again.
I'm sorry, I'm talking about an edge case here. Okay, what if a cardholder doesn't have any outstanding to pay? Okay, and his card is blocked, and then after that there is a recurring transaction gets posted to his account. Okay, so how does issuer recover that from the cardholder? There can be a scenario, right? The cardholder is not willing to pay now. He's assuming, he's under assumptions that there's no transaction, his card is blocked, right? So none of the transaction gets approved or not going to approved. So how these kind of scenarios are handled, right? The customer is already educated about it. Like even if the card is blocked, his recurring transactions can still be, processed in the system.
So there's settings actually that you can set there. You can state that if the card is frozen, still allow recurring transactions through or not, right? And also, so what will happen is that it will just do a decline, And then if the merchant tries to do a force post, the force post will still go through. But also at the same time, the chargeback rights are still on for the cardholder. So you could say that, hey, look, this particular transaction was supposed to be declined. The merchant still chose to do a force post, and the cardholder does not want this charge. Sometimes what could happen is if it's a debit account, it could bring the cardholder negative, right? And so you don't want that situation. So you should be able to, as the issuer, you can run it as a chargeback against the merchant and say, you know what, the cardholder never authorized this. So there's a lot of rules that are in favor of the cardholder.
So thank you, Ahmed. I think a lot of information, a lot of knowledge has been exchanged throughout this session. It was really a great session today. I wish that we could continue maybe in future. Okay, we can make some more engaging content together probably. But for this session particularly, thank you so much for sharing your invaluable insights today. It's been truly a pleasure having you on the stage with us. Thank you so much, Ahmed.
Thank you so much, Ramesh. This was absolutely a pleasure and it was a lot of fun. So we should do this again.
Yeah, I look forward to making more content together. Probably in future we will try to create one or two more podcasts, or probably we can have some knowledge sharing sessions together on a board. Okay, for our audience. So we'll definitely we'll stay in touch and we'll try to do something in future. Thank you very much.
Sounds great. Thank you so much, Josh.